Hello and welcome back. Now I know it's been a while, but without any excuses or further to do, I want to show you something exciting, and that is Stora Enso. Now this is a forestry company that is going through some changes right now, and I see some opportunity. A company that has their forest and they log the forest and then they sell the forestry products as like refined things to end consumers. So they're divided into packaging materials, packaging solutions, biomaterials, wood products, and forest. And the packaging solutions and materials, that's like the largest part of their firm, as you can see here. And if you look at it by end use, then it's pretty much what we all use. You don't even think about that it's Stora Enso. But yeah, it's food and beverages, pharma, industrial, construction, and things like that. So they're everywhere. And I think, yes, it might be cyclical, but it's resilient at the same time. You're not going to stop using packaging. And to really drive home the point, I would like to show you the Stora Enso website itself. And you can find here under products, they have like listed all of the different things they do. So here's like crazy things I didn't even think about, like wood foam, and then the pulp looks like a bit of cotton, lignin and things like that. But I mean, I encourage you to go here and like press these up or like check them out for yourselves. It's quite interesting. They even have subcategories, and yeah, of course they're trying to sell, but you also find some information as an investor if you would like to do some deeper research or even just learn about the forestry industry. A lot of products. And as I said, they do the logging either from their own forest or from different places they procure from. They're trying to take the most value out of the wood for each part of the tree. So for the large diameter wood, they make wood products and building solutions. And then from the bit smaller, then some board, paper and lignin apparently, and then they burn like the tree tops and branches for renewable energy. And they also have a significant energy production. They own shares in nuclear facilities as well, and I won't get into it too much here because they use most of the electricity themselves. But if you want to invest in nuclear stocks and you find that the constellation energy is a bit too expensive for you, then Stora Enso owns a significant amount of nuclear energy as well, and you're basically not even paying one-time book to value for it, which well, I'll get to it later, but that's a bit my thesis here. They say in their own slides that they are a leader in all these different kinds of products, and also if you check out the blue chip consumers then or customer base, then yeah, I mean, like, why not have Stora Enso packaging board when you buy your Nike shoes? And I know you're probably dying to see the stock chart, but I want to show some baseline of what they're aiming for. So that would be a 4% revenue growth, 10% EBIT margin, 50% payout ratio, as many Nordic companies do. They want to pay a large dividend, and then they want to be quite unlevered. Right now they're a bit higher, but they want to lever down to below 1 times net debt to EBITDA. So this is a chart that looks quite similar to other stocks that I've covered on this channel. It doesn't look quite great for the last 5 years, been very stagnant, and also over the like year to date they were up for a while, but all in all down 7%. But even though the stock has been stagnant, the revenue hasn't. I mean, the revenue has been flat, yes, but the different segments have been getting different amounts of revenue. And as you see, the paper was divested, which was a big part of the revenue. And on the other side, packaging has been growing quite a bit, and that's actually what they are now starting to aim for. Last year divested 12% of the Swedish forest assets, which was a pretty good divestment since they are below book value, and they are planning to divest even more of that, which we will get to later. Renewable packaging is estimated to grow by 3 to 4%, which doesn't sound like a lot, but since Stora Enso is ahead of the competition on these fronts, I think they have quite a good possibility to gain some market share here, as plastic is only estimated to grow by 2%. And they also have been making a lot of investments in their capex. They claim to have a really nice fleet of large and pretty young factories on average. And they are also cost efficient, as they have 38% of their plants in the first cost quartile and 38 in the second as well. And then just one fourth of their plants is in the lower half of cost efficiency. So that's a pretty good moat, if you ask me. And here's a bit expanded on that. So this Oulu mill, it's a quite new one, and there will be a bit of downtime, and there has been also a lot of investment there. And but they are now seeing some of the returns and starting to realize efficiencies there. That is for the packaging. And unfortunately, I didn't look up what the FBB or LPB exactly meant, but I think you get the picture that they do have some pretty cost-effective plants in general. For the overview of where they are, well, I said it was a Nordic stock, and yes, they do have a lot of mills in the Nordics, but they are also international, although they are mostly in the Nordics. And here you can see the wood procurement split up into their own and managed forests, and then also from other sources. So Finland, Sweden and Norway, that makes up about 60%, and then rest of Europe another 25, and then they have, as you see, in China and South America. They also want to be innovative, and they want to have different sorts of bets where they can sort of invent new things. And I won't get into this too much, but they are playing around with biochemicals, fiber products that are new, and then also try to get into the battery market, which sounds really interesting. So hopefully that's like call options that might work out, and they might get a profitable business out of it. And now I want to cover the divestment of the forest that I was insinuating on earlier. And they have a lot of equity in their forests, and 5.8 billion of this is in Sweden, and they want to spin this out as a new public company, which the shares of this company would fall in the hands of Stora Enso's current owners, so you'd get a piece of this if you owned Stora Enso. And yeah, so this would be a pure play forest company, and they are aiming for, like, for the equity of 5.8 billion, 7% of, well, historic value return through different parts. This is maybe a lot of information here. You're welcome to pause if you want to read, but pretty much they assume that the 4.5% could be from land appreciation, and then the standing stock volume growth of 1%. That means they cut down a little bit less than what is growing, so the amount of wood on these forests would actually increase by 1% per year. And then the annual harvest return of 1.5%, which is taking into account a margin of 50% from like the revenue minus the logging costs to get 1.5%. And then also the possibility of non-harvest related returns, such as renewable energy, to let companies make windmills in their forests, and then also having some carbon storage possibilities, which may be coming to Europe. I mean, probably, perhaps. And then also, well, acquire, divest and leverage zoning to get some even more returns. And the point here is Stora Enso is trading well below their book value. Maybe if they spin out their forest, they will still have the same contracts of about like 18 years forward of slowly decreasing commitments to Stora Enso. So Bergslaget Skogar, this company, will still get secure revenue from Stora Enso in the beginning. Stora Enso will be able to procure the wood they need from this, but then maybe this company could get a higher multiple, as well they'd be able to divest if they were below, or acquire if they are above NAV. And then also I think, well, it's an attractive asset. And then Stora Enso might also be able to get some additional returns from optimizing their procurement strategies. Now, before getting into the valuation, I would like to show a little bit more about the profitability of this company. and it hasn't always been great, but I see potential. You can see the revenue here in orange. As you saw earlier as well, it's been flat. Then in blue you have the EBIT, operating income, which we will be comparing later. And then in purple the cash from operations, which should be and is quite closely linked. Then in green is the capex, and this is sort of the problem with these kinds of stock or companies. They have a lot of revenue, yes, and it's quite stable. People need packaging, and then they are able to make cash from it. But because it's quite capital intensive, they invest a lot in their factories, and they always need new factories, and they need newer equipment, and they need to be more efficient to realize cost returns. But then the competition also does it, so then it sort of evens out. But I think now, as you saw also, they are quite low now in the cost quartiles. They might be able to start chilling with the cash burn, but even if they don't, I see possible returns. So I made a bit of a special spreadsheet for this one. Here is the equity now from the second quarter of 2026, and the market cap with this share price would be almost 8. That implies a price to book of, and this is by the way tangible equity, I removed all the intangible assets, of about 280 million. And Bergslaget Skogar, which is the new forest company, will get 5.8 billion in equity. And if we assume a one-time price to book, then that means you get the rest of Stora Enso after the spin out in the first half of 2027. You're getting that 5.5 billion of equity for 2.1 time, or 2.1 billion in market cap, meaning what, 0.4 times price to book. Now this isn't taken into account how the debt is going to be distributed, but if all the debt remains with Stora Enso, this would be the case. And even still, if some debt gets put onto Bergslaget Skogar, then the calculation would look the same anyway, because they would have a bit less of market cap, and but this would have a bit more equity. But anyways, I think this is quite unrealistic that the price to book would stay at 0.4. Seriously. And of course the price to book here doesn't necessarily have to be 1, but I don't see why it wouldn't get to that point eventually. And even if it stays a bit under, then you're getting this at a ridiculously cheap price with an adjusted EBIT implied multiple of 6 with 0.9. But with 1, and if we want to have a 6 times multiple target, then you can get a return of about 14.5% until next year. Now Stora Enso has once in a while been very profitable as well, so if we want to, we can make an upswing scenario, like a bull case, because I think this is the bare minimum. I mean, I'm not counting in any growth, I'm just assuming that the forest will be repriced according to its equity. If they do get a bit more EBIT, and maybe Bergslaget Skogar gets priced at a bit above NAV even, because international investors can get access to the Swedish forests for the first time, then with these numbers you're assuming 0.3 times price to book, and with a terminal multiple of 8 you're starting to get pretty insane returns. And the point here is not that 14.5% will be amazing returns. What I'm saying is that at these prices you are assuming that the rest of Stora Enso would be trading at half time price to book, and I just don't find that realistic. But as always, I might be missing something, and if you are of different opinion, I would love to hear it in the comments. And as always, this was just my opinions, but yeah, I hope this was informative, and I hope you liked it, and I wish to see you again soon, hopefully.